Hello everyone, it is Wednesday, May 28. Today we're taking a closer look at the euro and the British pound charts to assess potential market shifts. Both the euro and the pound extended their bearish correction, which now threatens to evolve into a broader downtrend or, at the very least, could stall the uptrend seen since mid-May. If buyers fail to regain control, the market could enter a consolidation phase that breaks the prevailing bullish momentum. As for the US dollar's renewed strength, it was underpinned by stronger-than-expected data. April durable goods orders came in upbeat, and consumer confidence showed a solid rebound. The Conference Board's Consumer Confidence Index jumped to 98 in May from 86 in April, far exceed the consensus forecast of 87. The data suggests the optimism around trade deals and expectations of new international agreements is boosting sentiment among American consumers. Against this background, the greenback strengthened, putting pressure on the euro and British pound. Now let's take a closer look at today's macroeconomic calendar. Key releases include German import price data, as well as household consumption and GDP growth figures from France. While these reports are expected to be positive, they are unlikely to offer meaningful support for the euro. Germany will also publish its unemployment report. Analysts anticipate an increase of 11,000 in the number of unemployment people, while the unemployment rate is forecast to hold steady at 6.3%. A stronger-than-expected reading could trigger a brief uptick in the euro, but any rally is likely to be short-lived. All eyes, however, will be on speeches from Federal Reserve officials. Their comments could shape expectations for the dollar's next move. Markets will also closely watch the minutes from the latest FOMC meeting. Still, the reaction may be subdued as the Fed has kept rates unchanged and reaffirmed its existing policy stance. Many policymakers are waiting for fresh inflation data to gauge the impact of President Trump's tariff measures. So the minutes may offer only limited insights, though traders will be parsing them for any signals of a potential policy shift. Turning to technical analysis, the 1-hour EUR USD chart suggests that a false break at 1.1300 would trigger a buy signal, potentially pushing the euro up to 1.1336. A break above this level could pave the way for further gains towards 1.1374, with the most distant target at 1416. At this level, I recommend going short on the rebound, anticipating a 35-40 pip pullback. Short positions at 1336 and 1374 could be considered on the false breakout. In a bearish scenario, if the price holds below 1300, the euro could dip to 1259, potentially reaching 1221. At this mark, it would be wise to open long positions on a rebound, expecting an intraday correction of 35-40 pips. Going long at 1259 and 1300 would only be relevant in the event of a false breakout. As for the British pound, the setup is similar. A drop to 34.47 followed by a false breakout at this level would generate a buy signal, potentially lifting the GBP USD pair to 34.97. With a light macroeconomic calendar and no key data releases from the UK, a break above this mark could extend gains toward 35.41. At this level, traders are advised to go short on the rebound, aiming for an intraday correction of 35-40 pips. Short positions at 34.97 should be considered only in the event of a false breakout. Going short at current lows is quite risky. Only a firm break below 34.47 could drag the pound down to 33.99 and potentially 33.74. At the level of 33.74, a long positions on the rebound would be reasonable, targeting a 25-30 pip bounce. Long positions at 33.99 and 34.47 should be only considered in case of a false breakout. Best of luck to all.